Good morning, my dear FK students. Today I am going to explain the day 4 class. So today we are going to discuss the calls in arrears, calls in advance, interest on calls in arrears, interest on calls in advance. What is the accounting treatment? Okay. So today now I am going to explain the calls in arrears. What is mean by calls in arrears? So sometimes the shareholders fails to pay the allotment or calls money whenever it becomes due. So then it is called calls in arrears. What is the accounting treatment? So any one of the two methods you can solve the problems. So first method is without opening a calls in arrears account, with opening a calls in arrears account. So without opening the calls in arrears, what are the journal entries we need to be follow? Okay. First, on receipt of the first call, so share first call account at R2, share capital. On receipt of the money, that is bank account at R2, share first call account. So next one is due entry in case of final call. What is the entry? So share final call account at R2, share capital. So what is the receipt entry? So that is a bank account at R2, share final call. Suppose subsequently if you are receiving the calls in arrears amount subsequently in case of first call and second call amount, that is final call amount. The entry is on receipt of the call money. On receipt of the call money, the entry is bank account at R2, share final call, to share first call first call account. Okay, that is the entry. Second method is by opening a calls in arrears account. What are the journal entries we need to be follow? So first one is on making of the first call, share first call account debtor to share capital. Then what is the receipt entry? Bank account debtor, calls in arrears account debtor to share first call. So bank account, how much amount received you need to be mentioned in calls in arrears. How much amount you didn't receive the call money from the members, that amount you need to be right. So in case of making of the final call due, so what is the entry? Share final call account debtor to share capital, receipt of the final call money, so that is bank account debtor, calls in arrears account debtor to share final call account. But subsequently whenever you are receiving the either first call or final call, what is the entry? Very simple. Bank account to debtor to share final call account to calls in arrears account. So that entry you need to be made. So these are the entries. So then what about interest on calls in arrears? So generally if the AOA provides, so company may charge company may collect the interest on calls in arrears from the shareholders. So generally the rate of whatever the rate of interest it can be specified in the AOA, that rate of interest company can collect from the members. But however, so if the rate is not specified in the AOA, so that is the rate as per table F regulation. Table F very clearly they said that so that is rate of interest is 10% per annum. They can be collected from the due date till the actual date of payment. We need to collect the interest on calls in arrears. So that is then actually they cannot in AOA they cannot be specify the rate of interest over and above the 10%. So the maximum is 10%. So if the AOA nothing is specified, you can consider 10% as a rate of interest on that is interest on calls in arrears. So then what are the journal entries we need to be focused? So there are three entries, that is interest on calls in arrears, due entry, receipt entry, transfer entry. So due entry is so that is a sundry members account debtor to interest on calls in arrears. Receipt entry, bank account debtor to sundry members. Transfer entry, interest on calls in arrears account debtor to statement of P&L. So this is all about interest on calls in arrears. Then what about calls in advance? So what is mean by calls in advance? So generally calls in advance means actually the company they didn't call the call money, but the member paid in advance. That is called calls in advance. Say for example, company called only first call money, but the member is paid along with the first call. He is making the payment of final call also. So that is what extent he paid final call along with the first call. That is called calls in advance. Okay now. So generally, what is the accounting treatment whenever we receiving the calls in advance? Okay, very simple. That is a bank account debtor to calls in advance we need to write. Okay now. So but subsequently Subsequently, we need to make some adjustment whenever we are receiving the calls in advance. So first due entry, suppose if there is a due entry relating to call money, so share call account debtor to share capital. So receipt entry, bank account debtor, calls in advance account debtor, okay, to share call. So that is we need to cancel. So what extent in advance we received, that we need to cancel it now, okay. So this is the entries when we are receiving the calls in advance. Then what about the interest on calls in advance? So generally the AOA can specify the interest on calls in advance. It is a charge for us, but the reason being it's an expenditure for us, okay. So interest on calls in advance. So what is the maximum rate of interest? Very clear, as per table F, very clearly they said 12% per annum in case of interest on calls in advance. So there, but what are the general entries we need to make in case of interest on calls in advance? Again, 3 entries. One is due entry and payment entry and transfer entry, okay. In case of interest on calls in advance, so the entry is interest on calls in advance account debtor to sundry members. Receipt entry, bank account debtor to bank, that is as simple, we are paying the interest on calls in advance, no. So payment entry, that is sundry members account debtor to bank, okay. Then transfer entry, so statement of P&L debtor to interest on calls in advance, okay. These are the entries we need to be passed, okay, in case of interest on calls in advance, okay. So with this knowledge we can solve the illustration number 14, okay. So it is a combination of both interest on calls in arrears and interest on calls in advance. So we are going to discuss illustration number 14 now, okay. So before that you can download the PDF. So now that is assignment number 4. So now I am going to explain. A company issued 50,000 equity shares of rupees 10 each at par, payable as under, okay. Face value is 50 rupees, 10 rupees, face value is 10 rupees, number of shares is 50,000 equity shares. On application 2 rupees, application money 2 rupees, allotment money 1 rupee, on first call 3 rupees, on final call 4 rupees per share. 4 months after the first call, that means, so due date, that is a final call, we called 4 months gap when comparing with the first call. So there is a gap between first call and final call, 4 months is there, okay. So now amount due on application and allotment was duly received, okay. That means we received application money as well as allotment money, okay, without any pending. That means regarding application and allotment there is no calls in arrears. The next one shareholder holding 1000 shares could not pay the first call money in time, okay. That means there is a calls in arrears regarding 1000 shares, okay, but he fails to pay the first call money, okay. So that means there is a calls in arrears regarding 1000 shares in case of first call. The next one, another shareholder holding 2000 shares paid the final call money along with the first call money. That means there is a calls in advance. So regarding 2000 shares, he paid final call money along with the first call money. So that means regarding 2000 shares, it is a calls in advance, okay. Now final call was made, okay. So next, all the shareholders paid in full first call arrears on 1000 shares along with the interest on calls and arrears were also received at the time of final call. So that means what? So whatever the calls in arrears is there in case of first call, that 1000 shares amount we are receiving at the time of final call, okay. So for that we need to make an entry, okay. So the company paid interest on calls in advance and charged interest on calls in arrears according to the provisions of table F, okay, of schedule 1 of the Companies Act 2013. So that means table F, they said that regarding interest on calls in arrears, interest on calls in advance. In case of interest on calls in arrears, so we need to collect 10%, but in case of calls in advance, we need to pay 12% per annum, okay. Then make entries in the company's journal for transactions relating to first call and final call. That means we need not pass an entry relating to application and allotment. we need to focus on, or we need to write the journal entries in case of first call and final call only. So now in case of first call due entry, what is that? So that is a equity share first call due entry, equity share first call account data to equity share capital. So total how many shares? 50,000 shares. So 50,000 shares into first call amount, how much is share? 3 rupees. So that is 50,000 shares into 3 rupees, that comes 1,50,000, that is due entry. Then receipt entry, in that receipt entry regarding 1,000 shares, there is a calls in arrears. But regarding 2,000 shares, there is a calls in advance. Okay. Now, so bank account debtor. Okay. Bank account debtor. Calls in arrears. Okay. Within bracket 1,000 shares into that is calls in arrears into 3 rupees. Okay. Now, 2 equity share first call. 2 calls in advance 2,000 into 4. Okay. That amount you need to write. Okay. The next equity share final call due entry. Okay, equity share final call account debtor to equity share capital. Okay, so that is 50,000 shares into 4 rupees. Okay, you need to write in due entry. Then receipt entry. So receipt entry, so already we received calls in advance. Okay, at the time of first call, that will now we need to make an adjustment now. So bank account debtor, calls in advance account debtor to equity share final call. Okay now. So that is in bank account that is 48,000 shares into 4. But in calls in advance 2,000 shares into, that is 2,000 shares. Yes, 2,000 shares into 4. That is 8,000. So then, but we received at the time calls in arrears amount regarding 1,000 shares at the time of final call was made. So that time, so bank account debtor to calls in arrears. Okay. So that is 1,000 into 3. That is 3,000. Okay. Now we need to charge and we need to collect the interest on calls in advance and interest on calls in arrears also. So that what is the due entry in case of calls in advance? So calls in advance account debtor to sundry members. So how many months, Andy? Actually 4 months. So there is reason being there is a gap between first call and second call, 4 months. They said very clearly. So that is 8,000 rupees calls in advance amount to 8,000 into 12% into 4 by 12. So then we can find the interest on calls in advance. So that amounts to 320. So the next one is receipt that is payment entry, interest on calls in advance. So sundry members account debtor to bank. Okay. So then transfer entry also we need to make. That is in case of 320, statement of P&L debtor to interest on calls in advance, 320. So then regarding interest on calls in arrears, okay, due entry. So that is sundry members account debtor to interest on calls in arrears. Okay, how can you calculate interest on calls in arrears amount is 3,000. So 3,000 into 10% into 4 by 12. So then receipt entry, bank account debtor to sundry members account. Okay, that is 100 rupees. Then transfer entry. So that is interest on calls in arrears account debtor to statement of P&L, 100 rupees. This is transfer entry. Okay. This is all about calls in arrears and calls in advance. If you have any doubt, please call me and clarify. Thank you.